Okay. Hello, Zach. How are
Hey.
you? Thank you, everyone, for coming, and thank you, Bitcoin Magazine, for putting on this event. It's great to be back in Amsterdam again. Last year, when we were on this stage, we were entering a pivotal halving year. We made it. We're here again. We're minus a couple people, though.
Yeah.
So CleanSpark has had consistent growth throughout that year, and with very ambitious targets. You've also focused a lot on M&A. You've purchased Grid. You've purchased sites all over the U.S. Can you elaborate on the targets that you have and on the M&A approach that you've taken over the past year?
Yeah, it's been a busy year. We actually just announced a few hours ago we have now tripled our hash rate since the beginning of the year.
Triple?
We have tripled it. The year
it's a
before
lot of infrastructure.
Yes, it is. Year before we had doubled, and the year before that we'd quadrupled. So growth is part of our DNA. It's what we've been focusing on specifically. I'm a big believer to be successful as a Bitcoin miner, scale is ultimately a key piece of that. We're a publicly traded company. We're on NASDAQ, which means you have overhead, you have everything that goes with it. And so the best advantage we could get as a mining company was to grow to the point where every single new miner we plug in, all of that goes to the bottom line. And that's what we've accomplished now. We're in that position and have been for some time. Everything is additive from this point. And that makes it very hard for anybody to ever catch up. So really believe that Bitcoin is the best place to put our capital right now, and that M&A strategy has been critical. You mentioned both public and private companies we've acquired, and our focus has been on distressed assets, on assets that may be overlooked, on rural neighborhoods that no one's ever heard of before, and it's worked really well. It's worked really well, and we're really happy with what we've accomplished.
I think that's one of the main points that always gets lost is that Bitcoin mining goes really anywhere, right? And so rural communities, they are revitalized because of mining, which otherwise might not have been a thing. So pretty cool to see those random places in the U.S., right?
Oh, absolutely. And they're full of hardworking people that, when you think of how, especially in the U.S., how highways got built, if you were a town that the highway didn't end up going through, your town got left behind. And so it may have been a thriving community in 1955, and by the time you get to 2020, technology just passed it by. So being able to bring technology into a town, new opportunities, it also creates a new way of thinking, a town that maybe hasn't been exposed to a lot on the outside. But again, very hardworking people always live there.
Yeah, there's a facility that I used to work on. I still talk to the local county judge quite a bit, and it's has a small population, so it's fun to see how the emergences of worlds start to happen around Bitcoin. So U.S.-based companies have all had a really aggressive growth plan over the last couple years. We've seen crazy numbers and targets, some met, like yours, some not met, which will remain unnamed. During my talk at Bitcoin Nashville, I mentioned how I would like to see a shift in how we focus on mining companies as only growth companies and really, think about the ROI for shareholders. When do you think miners will be measured on ROI?
I think that we're starting to see that. It's when the industry or the investors start buying strategy over ideology. And I think we're getting there. And what I mean by that is everything we do needs to have an ultimate outcome for the shareholders. That's what we are at the end of the day as a business. So if the right move is to hold all of our Bitcoin, which we're doing right now, or if the right move is to sell some of it to continue to build. That was actually our bear market strategy, is we built the Bitcoin balance to a certain point, and then we did what miners are supposed to do. We distributed that in the world. Bitcoin is to be used by all of us, to be held on single company balance sheets. As much as that adds value, that was really part of Satoshi's plan, is miners were to distribute it out and use it. So I think it's about taking the steps that actually add value. The missed targets are a big one. It used to be that a miner could throw up any headline and their stock goes up 10%. I really like where we're at now, where the rewards are not automatic. You have to earn them. But I still think that there's a ways to go.
Yeah, if you think about it, we've looked at miners and what they report. And so across 20 different miners, we've seen 13 different metrics, or more than that. Some that we didn't even count because I didn't even understand what they were trying to get at. Even things like the cost to mine, how miners calculate that is so different. So how do you, as like an investor, decide whether one company is good versus the other? I'd personally love to see some industry standards around metrics, and ones that actually matter, and something that like you can compare one company to another.
We absolutely need to get there. There are so many metrics that get measured differently. Example, 30 exahash. I said we hit that today. If you went and you looked at our mining pool, you could verify it right now. We don't announce it till we actually achieve it and are using it. There's a lot of miners that say, hey, we reached some target, because there's a machine sitting on a shelf that's not turned on yet. And until that machine turns on and produces value, I don't think it should be claimed. Cost of power, that's an important thing for miners, but it should be all of your cost. You can't say the wholesale cost of power and ignore the tax, emission, and distribution fees.
Yeah, and even when you look at like your home electricity bill, right, you see this cost of power, and then you see that the transmission costs are basically equal to the cost of power. What I've seen, and not all miners are like this, but I've seen some miners give you just that first number versus both, and so it changes their overall output, which is unfortunate. So, definitely industry standards on metrics. Do you think we'll ever get there?
I think we will, because, although unpopular, my opinion is that when it comes to, especially the public miners, there's always going to be lots of miners in the world, but we will get to a point where only 3 to 7 are ever talked about. And that's just because the public markets work. You think of cell phone companies right now. If you can name 4, right? No one can name 4, everybody can name 3. You can go through a dozen different companies. It always consolidates towards that 3. And so I think that's what we're going to see. There will be 3 that stand out. They will be the benchmark companies. That's when we'll see some standardization. That's when we're going to see performance matter versus a headline.
Another major topic this year has been AI, right? And understandably so, with the connections between energy and mining. My opinion is that companies need to be extremely thoughtful on a solution to incorporate AI into their business. You can't just say, I'm going to do AI without being able to actually do it. You have to have a calculated plan. You obviously in CleanSpark have been at the forefront of the mining industry, but you have said some things about AI, but what is your approach at the AI boom? Are you taking advantage of it at all?
What we have said is that we're not pursuing it. But there's a reason. The reason is that, again, strategy over a headline. If we're going to do something with AI, it's because we're committed to something. There will be a plan. There will be a customer on the other side. There will be a business. And I think that's the number one thing that is getting overlooked. Bitcoin miners have no customers. It's a great business. I love it. Our customers is the algorithm and everyone that uses Bitcoin, but we don't sell anything. We don't have to do any of that. There's no administrative part where you have to take customer support calls. When you run a data center, you have all of that. You need a sales team. You need all these pieces. So it should never be underestimated the effort it's going to take to do that. Unfortunately, there's a lot of kind of sprinkle AI on it that is happening where it becomes a talking point and a business strategy. Now, where do I think the intersection of AI and Bitcoin come? In a very real way, I think that there's going to be an amazing opportunity, because when you look at an AI data center, it has redundant power. Well, that means there's a bunch of power that isn't being used. Maybe a miner could use it. And then it could give it back to the data center if and when a redundant event is needed to source that power. You also end up building these very high-capacity facilities that are not used 24/7, 365. You think of how people actually use the internet. We're not running models while we're sleeping as individual users. Businesses are. They're running a wind model to understand how it blows in an area. That may be an overnight run. But you have these ebbs and flows on use cases, but you still want to use the full capacity. You could park a Bitcoin mine next to a data center and always be using all the capacity, But the trade-off is you mine less Bitcoin whenever AI is not there. So instead of it being AI or a power strategy, or Bitcoin and a power strategy, you're kind of playing three levels. I still think, though, that the best place to do that is with partnerships. Core Scientific, for example, great opportunity.
Yep.
I think they're doing it right. They're probably the only company, I think, that has a good opportunity in front of them in the space. And I think that partnerships are going to be the long-term way to go. Because who wants to compete with a hyperscaler anyway?
Core Scientific was also interesting because they had been mining altcoins and using GPUs way back in the day. So a lot of their facilities were built for that, right? I think that's one thing that gets really overlooked with this whole AI mining situation. Infrastructure is not the same. No. It's not the same build. You have different inputs that you need. You need redundancy power. So when someone says they have a 100 megawatt facility, you can think about it as 50 megawatts for AI, right? At least that. You need fiber network, which is not really in all these remote places where Bitcoin mines are being built. You need a different skill set of people, and it's just very different. And then a very different build and a very different cost of build. So per megawatt cost, I think we could look at and we could say on average is $450K per megawatt, right? That's what we're seeing being
$500,000 is the easy
sold
number.
in the market,
yeah.
And what people are buying at. For AI, we're seeing $1 million plus per megawatt. So it's a 10 million, I think, is what Russell said.
Microsoft's spending up to $90 million a megawatt on some of their data centers.
So, mining companies are strapped for capital to begin with. How do you compete with the hyperscalers? So it should be interesting to see which companies actually play out in it. I think the other approach that I've liked is groups that have said, hey, we're looking at this. We're going to see if it's viable for our site. And if we do and we do it right, we'll let you know. I think there needs to be this education to the shareholders to explain why it's important for them to start looking at it, to give the maximum value for whatever site they have. This year also was a heated political year with the election happening. Obviously, politics have been a critical factor for mining over the past 4 years with the last administration up in the U.S. There has been a lot of pushback on mining companies. Can you speak to some of what you've seen over the past 4 years?
Politics, my least favorite subject usually. Because I think at the end of the day, we all know Bitcoin's going to be fine. Bitcoin will continue to thrive in its own environment. Now, with that said, that there's going to be definitely opportunities that are going to benefit the Bitcoin marketplace, I'll call it that, in general, and all the participants that are in it. And a key thing I think that's important to take away, lots of meetings with senators, lots of meetings with former, maybe future presidents, and it's about what's the ask. What we're really asking is not for special treatment. It's about just being treated fairly and not attacked. And I think that's the one problem that not the one problem, there's many problems. But Bitcoin is not anybody's enemy. It is not going to boil the oceans tomorrow. It's just about being on a level playing field. And I think as long as we can get to that threshold, everything's fine. And I think that that's honestly the best outcome, because we don't want politicians meddling in our businesses and subsidizing them. We want them just to let us mine Bitcoin. And so all of those conversations, what I will say is I'm enthusiastic for what the future holds. I think that we are making movement, we are making ground, definitely in the US on one side more than the other. But because we're making ground with one side, the other side is starting to pull further over. And I think on a long-term basis, I want Bitcoin to stay apolitical. I want it to stay out of politics, be a middle-of-the-road subject that everyone agrees is good. And I think if we can do that on a long-term basis, we'll win.
Bitcoin should be bipartisan, but I think how companies have been treated over the past 4 years have made it a little bit more partisan, which has been
absolutely
unfortunate. So What has CleanSpark done to push, the political stance of politicians? It's obviously been a lot of education, like you mentioned. It seems like a lot of the larger companies have policy groups now that are actively working on things. So what are some of the efforts that CleanSpark has worked on, both you and then with the larger mining industry?
So a big focus for us has been what we call our front door policy. And that means when we go into an area, we go in and we try and meet with everybody and the stakeholders. The easiest way to make Bitcoin mining friendly in a town when it comes in is to make sure everybody knows and it's wanted. If it's not wanted in an area, we move on. We're not going to push the issue just because there's a little pocket of cheap power. And I think that is the most important thing we can do. To make it the biggest impact, you start locally and then you build from there. Now, what are we doing as an industry to have a maybe outsized effect? One of the problems we've always had as an industry is Bitcoiners may or may not want to be involved in politics. There's a big libertarian aspect where it's just people want to stay out of it. And so as a result, we, along with some of our peers, have launched the Bitcoin Voter Project. Very excited about this. It's really based about research and understanding where the Bitcoiners are. And then when we find out where they are, it's about making sure they're aware of issues that could negatively affect Bitcoin mining. It could negatively affect their access to Bitcoin, their ability to self-custody. And then we want to be able to, on a long-term basis, activate these voters. Because there's a lot more people that have exposure to Bitcoin than our politicians realize. And they're starting to realize, which is the reason they're starting to care. Because for a big group of Bitcoiners, because of the libertarian ideals, it may be a single issue vote for them. You're either for or against us, and making sure that we can activate that base to speak up, to get involved in their local politics, the state politics, or even the federal side of things.
Yeah, it seems like miners are really the corporates of the industry when it comes to pushing forward certain things that matter and making sure that we can protect the businesses that are behind things. To your point, Bitcoin doesn't care, right?
Yeah.
But unfortunately, companies do have to care that have, how many employees does CleanSpark have now?
We have about 300 employees, almost all of which are in small towns.
Yeah.
So, and which I think is important because, again, it may be an overlooked place, but when you employ 35 people in a town of 350, you're usually the largest employer in the area. And so it does matter, and it matters to real people. We also recently announced behind every Bitcoin, and then it was about the people. We think too often that Bitcoin is kind of distilled down to numbers and algorithms. But when you look at what really supports Bitcoin, it's the Bitcoin miners. And that is an industrial process. There's people involved. It's hard work. Mining isn't this, like AI is, where it's kind of this clean space. It's air conditioned. It's nice. A lot of times it's hot outside. You're picking up heavy servers. You're putting them on. You're taking them down. You're cleaning them. You're doing all these things. And so the people part of this is really what keeps it going. And so it's making sure, like you said, it matters to business. Making sure that we can always keep those people employed and working hard.
Yeah, the actual act of mining is not that sexy.
No, it's not.
It's very physical, and it requires a lot of people.
Yeah.
So it's interesting to hear about how these revitalizations of communities really happen in places that we wouldn't expect. It was fun building out communities too, right? So I think that there's a lot of community service that goes along with some of the larger miners. And so I know you've done a ton of that to give back to the local community. The thing that I learned was that what is important to you is not necessarily important to that local community. And so at the last place that I had worked on at a mining site, one thing that was really important to them was a community pool. Not something you would think that you would ever have to learn how to do when you sought out to be a Bitcoin miner, but there we were trying to build a pool for this community that it was really important to. So I think mining takes you down these really weird roads and you don't understand, and then you're like, oh my God, this is the, people just hit a button and buy Bitcoin, but there's so much more behind it. So what do you think that there will continue to be M&A in mining over the next year? Or what do you think the future of mining will look like over the course of the next 2 to 3 years?
Well, I have a few more months to be wrong, but I've been predicting, the next push to the bull market is between September, which is now behind us, and January. And so everything we're doing now is to get as much hash rate on between here and there. And if I'm wrong a month or two, I'll still be happy about it. But I think that when that happens, for us at least, we'll slow down the pace of growth because everything will get more expensive. Because when Bitcoin is over $100,000, the miners are now going to be twice as expensive or 3 times as expensive. Somebody that has a mine today that's not making money because they have an old server, not run well, that's an opportunity for us to acquire it. They will be making money. Even miners doing a bad job will make money in bull markets. So I think we'll see a plateauing of that M&A cycle over the next year to 18 months. And then there's always a bull cycle. There's always a bear cycle on the back of the bull. And so I think that if we hit a bear market again, our growth will pick back up then. Because it's about the timing of growth, I think is incredibly important. We pride ourselves that I believe our cost of infrastructure on average is lower than most of our peers. When you can factor in machine cost, when you factor in the site cost. Because we made a point of not overpaying for our sites and buying them in bear conditions.
In the height of the bull market last year, I think we were seeing miners go for $82 a terahash. And those same exact miners are now being sold on the secondary market for $2 a terahash.
Yes, they are.
So if you didn't have insane power costs that were like lower than 3 cents and you were able to mine during that time frame, you didn't have a really good ROI.
No, it was really terrible ROI. And also there was a lot of debt taken.
Yes.
That's the other thing about this business is because it's such a volatile market, it's about taking and controlling your risk very tightly. And when you owe somebody else money, you're giving control away. And so, unfortunately, I think that will happen again in the next bull market. You're going to see a lot of leverage move onto balance sheets. And I think we'll see a repeat effect on the bear side. We'll see bankruptcies all over again.
It's hard for mining because it's not like a VC play.
No.
So how do you get access to capital? And how do you get access to capital at the scale now to be competitive with some of the groups like yourself?
Yeah, we rely on the equity markets, again, popular, unpopular, but we think it's the best way. I think of this business a little bit like a real estate investment trust. When you invest in a real estate investment trust, you don't want them to just put dollars on the balance sheet and stare at them. You expect to have a physical asset on the other side of that. And that's really what miners are doing. We're buying real estate, we're buying servers, we're running them for profit. And the asset coming around on the other side also is then Bitcoin. And again, that's why I think we're going to see these cycles where there's a time to add real estate, there's a time to add Bitcoin, and there's a time to sell.
Yep.
And
I think there's this narrative over the last cycle where it's like, it's a bull cycle, you have to get as much as you possibly can. But you're right, the best time to buy mining rigs is a bear market when everyone else can't really afford what they set up. So It's a fantastic strategy.
I feel like the right strategy is almost do the opposite of everybody else. It's worked out well for us, and being counter-cyclical proves that on the long term. The problem is there's not as many headlines. And again, if you go headline chasing, you just usually don't end up better off on a
There's
multi-year
not a
cycle.
lot of really great industry coverage on miners or people that understand it that are truly independent too, right? I think a lot of the groups that cover are not really independent.
Yeah. There's a lot of pay to play that happens in the space. It's something that we try and avoid. There's always the analyst banking side. Everybody needs the banks to cover on the analyst side. There is the wall that exists between them. But then there's all the other coverage. The problem we have, though, is the Wall Street analysts still don't quite get it most of the time.
Yep.
The education is happening by miners. And so that's where we need to do a better job of still educating them. But I still think some independent research would go a long way in the industry.
I also do think that TradeFi just thinks that they get it initially, and that's what we've seen happen over and over again, right? So they rely now on miners versus like relying on actually like digging in and learning about it. So hopefully, as more bankers get orange pilled, that whole narrative will shift, and we'll see some really good coverage, and then see how those metrics change and ROI can become a focus. So next year, we come back here and we sit down. What do you think the hash rate will be?
The network hash rate? I think it's going to grow a little slower than we think it's going to grow. I think it could be 800 or 900 is all. And here's why. I think that there's so many people that haven't prepared now that would have otherwise put machines on the shelf. And again, we're in this growth phase. And I can kind of look at all the public miners and what they're doing, and the fact that we are gaining global market share as a whole in such a significant manner means that the private miners are not putting things online. And so if I just judge that, I think it's going to be a little slower. The variable is if Bitcoin goes to 200,000 quicker than we expect, people are going to plug in S9s. And if the S9s get plugged in, we're well over 1,000.
Yep. Yeah, the hash rate always follows price.
Yeah.
So that's what we'll see happening. I totally agree with you. I think that the private miners are growing at a smaller scale again because of capital, right? Getting access to capital is super hard. Public miners still make up about 30% of the network, so there's still 70% of the network that can continue to grow at a crazy point. So it's great that we have some of these predictions on where public miners will be, because we can have somewhat of a grounding effect of where we think things will be versus when all the hash rate was somewhere else, not in the US, because we weren't able to understand that. So I would say 850 to 900.
Okay, so we're in the same ballpark.
Yeah, I think we're in the same ballpark, which is good. Not very exciting for you guys, but good for us. What do you think will be the most important thing for miners over the next year?
I think it's going to be about being prudent, not overpaying when we shouldn't, because we control the market in a way, for example, machine prices. If a miner is willing to overpay, then the market will take it. If we're not willing to pay up, then that's going to be it.
Yep.
So.
All right, let's see where we end up next year. Thank you, Zach.
Okay, thank you.
Yes, welcome back to the Bitcoin Magazine live desk. Coming live to you from Bitcoin Amsterdam. I'm joined here by Daniel Batten, researcher about Bitcoin and energy, as well as Tom Wouters, head of marketing at River. Daniel, we just spoke about mining in China, but actually at the conference here you spoke about family office and sovereign wealth fund adoption of Bitcoin. What's the story there?
Story is that they all want Bitcoin on their balance sheets, but they all believe they can't because it doesn't tick their ESG box. And when we're talking about the amount of money, if you put ESG in funds and sovereign wealth funds together, $65 trillion of institutional capital. So that's pretty significant. So if you can imagine if 1% of that was able to deploy into Bitcoin, which is not unreasonable since a lot of the Wall Street funds are put 2 to 3% in, that could, double, triple, or more of the market cap of Bitcoin. So there's a significant opportunity to have discussions to bring them up to speed with the new data-based ESG narrative on Bitcoin, as opposed to the media-based narrative, which is not backed up by data or backed up by insubstantial data, because that can lead to some very different investment decisions, which is really exciting.
Right, and Sam, you also spoke at the conference, was it today or yesterday?
Yeah, it was today.
And you spoke about business adoption of Bitcoin, right?
Yeah.
So what did you talk about? What's the story there?
Everyone's waking up, right? Everyone wants to get in. It's across the board, and it's a trend we started seeing as of earlier this year, where companies began to wake up. Like, it's not just MicroStrategy anymore. At River, we have over 1,000 business clients on the platform now, and like 95% of them is planning to buy more in the next year, and 70% of them have never sold any Bitcoin. So we were just starting to see these trends that made us realize we want to investigate and produce some research. So we've put out a report on how business adoption has been growing, not just looking at the big companies that get so reported on, but there's tons of other public companies and even more private companies that are starting to add Bitcoin to their treasury. So it's been a tremendous trend that we're seeing that we've covered in that report.
And this is specifically about businesses putting Bitcoin on their balance sheet, I imagine,
exactly.
right? Not Bitcoin as in receiving it for payments?
Yeah. Well, there are some that do, obviously, but it's just the biggest trend is like they're copying what the individuals are doing, and individuals have been front-running Wall Street for the longest time. But now it's especially small to medium-sized enterprises that are getting in on this and see it as a way to hedge against inflation, but also kind of offensively, like, hey, if my treasury increases in value, then I have a competitive advantage against other companies in my own industry. So that's a big reason to start doing it too.
And specifically, you've researched this topic. Are you also actively helping companies, or is it just research on your end?
So River also onboards companies to help them put Bitcoin on the balance sheet in the US specifically. And we've, as a result, done research around this to map it out and make it really clear what's going on in the industry.
Right, got it. And Daniel, you are also actively helping these sovereign wealth funds and family offices, right?
Correct.
Can you tell us which sovereign wealth funds?
I'm not allowed to disclose at the moment, but just to give you an idea, 2 nights ago I spoke to 21 principals of family offices in Amsterdam. And to give a kind of a summary, at the start of the evening, they had strong opinions which were not positive towards Bitcoin and its ESG credentials. But what I found is their strong opinions loosely held. And by just an hour later, once we'd gone through the data and the peer-reviewed science on Bitcoin, they'd fundamentally, for the most part, changed their minds, which was exciting.
We got to go back to the main stage.
Is your company ready for the next evolution in financial strategy? Bitcoin for Corporations is your partner in securing the future of your business. With exclusive membership benefits, our comprehensive masterclass, and a network of trusted service providers, we provide the insights and resources to help you incorporate Bitcoin into your financial strategy, ensuring stability and long-term value. Strengthen your business. Innovate with confidence. Bitcoin for Corporations, protecting your treasury and positioning you for the future.